Nike's had a pretty solid year. Quarter over quarter, they have beaten their earnings, but the stock price is down over the last year. The 52-week range goes as follows. On the high side, $170. On the low side, $82. In this video, we're going to go through Nike's profile, figure out what this company is doing right, what they're doing wrong, and figure out the intrinsic value of this company and whether it's a good buy today. So with Nike, as I said earlier, the high of the stock has been $170, the low end being $82, currently trading at $117 at the time of recording this video. Their earnings were recently reported and they did exceptionally well. So with this company, we are ranking it a 7 out of 10. Now, what the software takes a look at is the company's financial statements, so their income statements, their balance sheets, cash flow statements, all that good stuff, and dissects it all to figure out what they're improving on or what they're not improving on. 7 out of 10 is actually a pretty decent score. They are getting deducted points in 3 different categories. One being their 5-year price to earnings ratio. Now, price to earnings ratio, we want to find companies that on average have a price to earnings ratio beneath 22.5 and lower, because that to me is a fair multiple, and you don't want to be overpaying for a company that has an extremely high PE ratio, which Nike has. 48.83 is where they're currently sitting on average, and currently the trailing 12 months price to earnings ratio is 32. So this company is trading a little bit at a premium compared to the earnings that they are bringing in. Along with their debt to equity ratio is 76.55. We want to find companies that have a debt to equity ratio beneath 50%. That would indicate to us that they're leveraging their capital through equity within the business and not taking on debt, which is important as we approach a recession. As recession pretty much onlooks us as we go forward. And last but not least, their share dilution. They've been increasing shares by not a whole lot, 0.37%. It's not a huge dilution that they're issuing to shareholders, but it is dilution nonetheless, so they're not going to earn any points in that category. So as we know right now, trading at a premium with their PE ratio being high on average, debt to equity being high, and share dilution being up, those are 3 categories that they're not earning points in. However, they are doing a lot of things right. One being the current ratio, sitting at 2.69%. This is great. That means the company is fairly liquid. They have enough assets on hand to cover their liabilities twofold. That's great. We want to find companies that have a current ratio of 1.5 and higher. Nike hit that, no problem. They also have an extremely high return on equity, sitting at 36.04%. That is great, and it compares to their trailing 12 months, sitting at 36.83%. So it's very consistent. That is phenomenal. Their EPS is also up, so their earnings per share has grown by 283% over the last 5 years, and it's evident here. On average, we have seen 2.57 for their EPS, and currently it is at 3.58. Well done, Nike. Their net income is up, the free cash flow is up, the return on invested capital average is sitting at 23.57%. That's a whopping huge number, and that's phenomenal. And their revenue growth is up by 6.6%. That is phenomenal. Well done, Nike. So they are doing a lot of things right. The numbers are looking fairly good with this company. So the question I ask is, well, I haven't really been following Nike per se, but at the end of 2021, it was at a high of this 168 realm, and now it's been slowly going down. But as it's been going down, here's the thing. Every quarter, they've been beating earnings. They've done well on their earnings, but the stock price has gone down, down, and down, and down. And this is the company that's, I believe, is not going away. The sponsorships, the athletes that represent this business, it's a $162 billion market cap. This is a company that knows how to make phenomenal products. But it's just odd to me that you see a stock price going down. Now it's on a little bit of an upswing. It's going to probably bring confidence to shareholders or people that want to get into this company. The company does pay a dividend, 1.07% yield, and that indicates a $1.8 billion of free cash flow being allocated to those dividends. So on average, their free cash flow comes out to be $4.1 billion. Fairly safe here, $1.8 billion. So that's pretty much half of your free cash flow is being allocated to dividends, and it can easily be paid off. Currently on average, it is $1.02 billion. So we'll see how that ends up in comparison to their on the annual basis later on. So far Overall, I'm liking Nike a lot, actually. I think this is a fairly solid business. It's a company that I eventually want to own in my portfolio. But the main thing is, though, I want to buy this company at the right price. Let's go over to the price analysis section. Now, what this section here does, I'm going to do a 10-year analysis. And using the historic numbers of Nike, I'm going to fill out different values that I believe this company can achieve, obviously coming from a conservative basis, with a desired return, and we're going to figure out what we should be paying for this company today. And folks, if you're enjoying the video so far, hit that like button, hit that subscribe button, the software in front of me, follow the links in the description box below if you want to use it for yourself. 7-day free trial. After that, you get charged, but you can cancel at any time. It's a stock spec software. It's a phenomenal tool that I use to screen stocks and figure out what they're actually doing and get the lowdown in a quick and efficient manner. I've only scratched the surface with this software, but along with the intrinsic value calculator, it's a one-stop shop and it essentially pays for itself, guys. Has the latest news on the company you're researching along with 10 years of financial data. This is a software you don't want to miss. That being said, here is what we've put in for Nike. Now, if you're new to the channel, I like to try to stay as conservative as possible. That's the whole spiel. I'm trying to find companies with a decent margin of safety. And I'm going to click calculate. I've done conservative revenue growth numbers, profit margins, and free cash flow margins based off what was shown here, as long with a price to free cash flow and PE ratio that I believe is somewhat applicable in the conservative range, sitting underneath that 22.5 threshold that I mentioned earlier. Along with the desired return of 13%, Nike is very overvalued. Take a look at that, guys. Current price is $117. Average calculations comes out to be $61.38. Not looking too great, considering that the 52-week range, we did hit a price of $82. That was way more approachable than what it currently is right now. $61.38 on the average calculation, 49 on the low end, 73 on the high end. This company needs to fall down by a lot. And currently, in the last 5 days, this company's stock price has been jumping up because of the hype around earnings that have been beaten. However, as we go forward and into a recession, I believe a lot of people will be selling off on this stock, and that is probably when I will start to jump in. It's doing a lot of things right. Obviously, I'm not a huge fan of the share dilution and their high debt to equity ratio. This is a brand that's not going to be going away for quite some time, and it's a brand that has a huge moat. I like it. I like the brand a lot. However, the price just needs to make sense, and right now it currently doesn't. If you enjoyed this video and you haven't done so already, folks, hit that like button, hit that subscribe button. And for a company to be analyzed, if you want to see it analyzed, write it down in the comments section below. And like I said, if you want to analyze your own companies and you don't want to wait for me, grab this software here. If my camera can just stay focused for 2 seconds, that would be phenomenal. Grab this software here, 7-day free trial. You don't want to miss out on this. I will see you in the next video. Thank you so much for watching.